Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. First of all, I would like to apologize for coming in very late this morning, as we've been trying to sort out some technical issues, like I said yesterday, which didn't allow us to be able to go ahead with our Forex Morning Mastery broadcast for yesterday, and a little bit of that hiccup came up this morning. So I was hopeful that we will sort this out, but I'm very grateful that things are quite sorted out right now, and then we are glad to go this morning. So I really appreciate your patience and thank you very much, guys. Welcome to yet another edition of the Forex Morning Mastery, your daily dose of financial insight and trading strategies. This happens to be our first edition for the week, as we were not able to do something yesterday, but we all have an idea of what we are managing, what assets we are managing for this week. As for those of you who are with me on both my trading view and telegram platform, you definitely must have gotten an idea into what we will be doing. And of course, if you have been following me on this channel, I of course did some couple of videos during the course of the weekend, giving you an insight into what our expectations could be like for the new week. And since the week has begun, we've not done bad at all, as most of the assets on our watch list are doing pretty well. The USOILSPOT is doing phenomenally well. The XAUUSD is just trying to gain some balance, while the USDJPY as well, we saw some little bit of traction, which could give us a platform to build on ahead of this week. So I'm very grateful for life and glad to be with you here this morning, as we will be taking another fresh new look at the financial market using our basic tools such as trend lines, key levels, and chart patterns, only to unravel the potential trajectory of price action today. And of course, I have exciting and insightful and very simple trading setup that I'm very excited to share with you. So I encourage you to stay tuned in, grab your favorite beverage, whatever you have, grab them, and let's dive right into the business. And for those of you who are joining us for the first time, I didn't forget you guys. I know you will be wondering what the Forex Morning Mastery is all about. Well, to simply put, I usually share a couple of videos, couple of weekend videos every weekend, which gives an insight into what we will be doing for the week. So the Forex Morning Mastery was born out of the necessity to do follow-up details on this particular asset. So this is why we have the Forex Morning Mastery, and of course we gather here on a daily basis to review and do follow-ups on our current trading positions as we prepare for both the London and the New York session. The session officially kickstarts about 9:05 a.m. West African time, 8:05 a.m. UTC. And of course, I recommend that you stay tuned in so you don't miss out on any of the valuable ideas we will be deliberating on today. And it's important to note that my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works, and eventually be able to use the information you gather in this community to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. So talking about comment section, I can see a handful of comment section from Jonah Aruna, John Alabi, Hadeni Babalola, Ronald Canil. You guys are wonderful. It's very I'm grateful to see you guys once again, and I promise you we have quite an interesting setups for today's trading session. So with that being said, let's dive right into the business. So as usual, the first thing we normally do is to keep tabs with the fundamental factors that is likely going to be affecting the market sentiments today. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the chart in technical patterns and price movement. Now, by monitoring the economic calendar, we tend to pinpoint, or let me say identify, potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we are monitoring for this week, we will be focusing on high impactful event from both the United States and the Japanese economic docket. Now, for today, January 23rd, we have high impactful event from the Japanese economic feature, which has already happened earlier today. And in fact, the data that came in was just as expected, as the interest rate decision still maintains the ultra loose monetary policy of the Bank of Japan, standing at a deficit of 0.1% at this point in time, which is not something everyone was surprised about at all. But the most important thing that came in this morning was the comment made by the Bank of Japan governor, which we will be discussing later on when we are talking about the USDJPY, which may change the market dynamics of this asset as we head into the second half of the week. So we are going to be looking at that in a moment, so I encourage us all to stay tuned in on that one. And another thing I would like to do is to let's include the mid-tier economic features and see if we can have a broader view of what could serve as catalyst for market sentiments today. So I want to include the medium impactful event, and let's see if we could still see something. Oh, we do not have any. So what this simply means is that we will be relying on our technical skills to strategically position ourselves for the next move. So with that being said, let's dive right into the business. Please click on the like button, give the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders, so I really appreciate it. And for those who had clicked on the like button, you guys are wonderful. Thank you very much as you do so. So with that being said, let's dive right into the business. I see you, Made on Hearth. Good morning to you. Glad to have you around with us this morning. So as usual, the first asset we will be taking, it's going to take some time again for my USOILSPOT to load up. So let me open another chart and let's see which one opens faster than the other. Okay. Okay, so all right, so it has opened. So the first asset we will be taking on today is going to be the USOILSPOT, and since I actually gave an update yesterday as regards to this particular asset without even giving a top-down analysis on this asset. And for the benefit of doubt and for the sake of clarity, I would like us to quickly run through what things are looking like from an holistic perspective. Then we'll talk about the fundamental factors behind the scenes. Then we go into the details on what we are looking at for today's trading session. So the first thing we will do here is to scale up into the higher time frame, and in fact the structural details we have on the higher time frame hasn't really changed at all, as it still remains the same with what we saw here last week. I wonder why this is taking quite a long time to load up. So let me open another one again, and I wonder why. So please give me a moment, please. Let's sort this out, and then we'll So like I said earlier, we want to scale up into the higher time frame where we want to have an holistic perspective into what is going on in this market. Now, like I said earlier, the structural detail we have on the daily time frame hasn't really changed from what we have been looking at in the last couple of weeks, in fact since the beginning of this year. And for those who have been with me in the last couple of weeks now, you will definitely be familiar with this current structure we have on the daily time frame. Now let's quickly do a dissection of what we saw here. And after taking into consideration the nature of price action since the month of September, that's an historical data of about 4 to 5 months thereabout, it is quite clear that the market has been very bearish in this structure. And when we connected the series of lower highs, we have this beautiful descending trend line which we have been using to guide our trading decisions. Now this trend line here emphasized the strength of the sellers in this market. However, something interesting happened during the first week of the month of December, and despite the strong bearish momentum in this market, we saw how during the first week of December, as soon as price got into that area around the $68 and the $70 zone, we saw how it became difficult for sellers to break through that particular structure. And this for us was a sign that buyers are gradually gaining momentum. Then this situation persisted, continued into the early days of this year as we saw another rejection of that area, and this time around price action was unable to break down the previous low, giving us a higher low to work with. And whenever we identify higher lows on our chart, it's a sign that buyers are gradually gaining momentum behind the scenes. Now, in addition to these structures we did identify, we took note that it appears that price action is gradually transitioning into what looks like a reversal pattern after considering the impulsive move that brought us into this point. And if we look at this closely, it appears that we are beginning to see what may look like a double bottom structure, where interestingly the neckline of the double bottom structure is exactly the same level we are using as our key level for this week. And of course, you know how we use our key levels in this community. As long as price action remains above the key level, we want to be looking out for patterns and structures that support the idea of buying. And if price drops below the key level, we want to be looking out for patterns and structures that support the idea of selling. Now, in addition to that, we have a neckline for our reversal pattern. And of course, when we have necklines identified on our reversal pattern, we're looking out for the breakout of the neckline to validate the potency of that reversal pattern. And as it is right now, we are anticipating that the breakout of this neckline here will be a beautiful opportunity, and in fact give us more confidence to be part of an uptrend move. Now, besides that, is the confluence the descending trend line here also shares with the neckline. So if price breaks out of the neckline, price would also have breached the descending trend line, which will be a beautiful signal that the trend line may no longer have the capacity to continue to negate the bullish attempt, thereby welcoming ideas of buying this asset. Now, looking at the structure right now and looking at what has been going on here in the last 24 hours, it's quite clear that price action is at a crucial juncture where it is currently oscillating just around both the descending trend line and the neckline. So we are looking forward to a breakout here to give us an opportunity to buy. In fact, everything is looking more bullish at this point in time. Now, if we take into consideration the fundamental factors behind the scenes which has been driving the market sentiment, I did give an update on both my TradingView and Telegram platform this morning. For those of you who are on that platform, you definitely must have gotten an idea of what we are looking at. But let's quickly run through this. We have different factors that is affecting the market sentiment, and one of them are the concerns over global energy supplies following a drone strike on Russia's Novatek by the Ukrainian military forces that happened on Sunday, hereby disrupting the oil production in that area. And this disruption in U.S. crude oil production due to, we also had some disruption in U.S. crude oil production in the United States due to extreme cold weather, which of course has also contributed to the upward pressure in the oil prices. Now, the situation in the Red Sea is still there, where we saw how the Iran-backed Houthi rebels have continued to escalate their attacks on maritime ships and vessels in the Red Sea, posing a risk of oil supply disruption in that regard. And of course, in response to this, the United States and the United Kingdom military keep on their military strikes on their targets in Yemen and of course at this zone. So this also has had some geopolitical tension, heightened the volatility in energy markets. Now, at this juncture, considering all the factors we have here, it's more of supporting an uptrend continuation at this point. And from what has been going on here in the last 24 hours, it's quite clear that price is gaining momentum. However, in the recent times, I think in the last 5-6 hours, we have seen our price has been oscillating just around that $75 area, giving us an insight into some level of indecision going on at that point in time. And this is not coming as a surprise at all, as we know that market participants will be looking forward to the upcoming crude oil stock data, which is released by the American Petroleum Institute coming up later today, to gain insight into clues on what to do next at this point in time. So we are not surprised at this, as major key players in the market will be stepping aside, waiting for the data to come in to see if there is a high demand for oil at this point or there is a high supply for oil. Now, with the information we have gathered here, let's scale down into the 1 hour time frame so we can have a look into how the week has started for us in this community. Now, yesterday I did updated us, gave us an insight into what has been going on since the beginning of the week, and it was quite clear that the week started with a consolidation phase, and in fact the first 8 to 10 hours we saw how price action was confined within the $73.35 level and the $72.80 area to emphasize the level of indecision at that point in time. And of course, you know how we use our flank ranges whenever we identify them on our market structure. We want to exercise patience and wait for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And of course, with our orders placed at both ends, we initially had our sell stop order triggered as we saw price break down the $72.80 level, but that position failed as we saw a bullish engulfing candle spring out of that area, leading to the breakout of the resistance line of that range at the $73.35 level to trigger our first buy position for the week. And since then, we've kept on buying this particular asset, and I can remember giving us updates on both my TradingView and Telegram platform that we do want to be adding more buy positions at the breakout of the $73.80 level. Then we also had another one at the $74.50 area, and of course we had the final one at the breakout of our key level for the week, which also is serving as the neckline of that reversal pattern we identified on the higher time frame. So at this juncture, we have a minimum of 4 buy positions running in profit. We were able to recoup the loss we incurred on that first sell trigger, and at this point in time we have a minimum of 250 pips running in profit at this point in time. And for those of us who capitalized on this opportunity, well done, and kudos to you for being on standby to catch this move. And as it is right now that price action has moved significantly well in our favor, it is high time we moved all stop losses to secure the current buy position. And I did updated us this morning that we should do the needful as regards to that. And based on this structure, I'm of the opinion that anywhere around the $74.50 level seems most appropriate to move all stop losses to. And of course, remember that we do want to be given enough breathing space for price action to move around. So move loss stop loss around this area, and let's see how the market will play out from this particular area. Now, with a well secured position at this juncture, what is going to be our next plan line of action? Are there chances that sellers could come in at any point in time, or is this bullish momentum still very solid for us to continue to add more positions? Well, if you look at the structure, you will see that price action has gotten into the neckline of the reversal pattern we did identify on the daily time frame, and of course that same level is also serving as our key level. Now, you know how we use our key levels in this community. When price action remains above the key level, we want to be looking out for patterns and structures that support the idea of buying that asset. Now, if price drops below the key level, then we want to be looking out for structures that will support the idea of selling. Now, since price action tested and broke out of this key level during the later part of the New York session, we saw an engulfing bearish candle bringing price back into the $74.50 level. And in the last couple of hours, we have seen another attempt by the buyers to break out of that structure, which looks as if they are struggling at this point in time. Now, let's look at the possibilities that this breakout, the second breakout, turns out to be a false one. Now, if it turns out to be a false one, then we will be having something like a reversal pattern in the form of a double top structure, where the inability of buyers to break out of the previous high will welcome a reversal pattern on the chart, where the $74.50 level will be serving as the neckline of that reversal pattern to incite a sell-off to the downside. So if this happens, price breaking down the $74.50 level to the downside, we might be seeing an opportunity to join a counter trend opportunity with the hopes that price may come back into this descending trend line. Let me quickly share that descending trend line with you on the 4 hours time frame, so we can all be on the same page here. So on the 4 hours time frame, there is this descending trend line that was spotted. Give me a moment, so let me show you here. So we have the descending trend line that was spotted right here, and this trend line was broken yesterday. And you all know that from a technical standpoint, when price action breaks out of a structure, we expect it to come back at some point to retest in anticipation of another wave of bullish momentum. So at this point, if price breaks down the neckline we identified on the 1 hour time frame, we will be looking at a minimum of 150 pips to catch in anticipation of the uptrend continuation. So that is one idea we will be looking at today. So I hope this is very clear, and you understand why we are looking at these possibilities for today. So that is that on the expectations of selling this particular asset at this point. So if price action will break down the support line, the $74.50 level, we look out for selling opportunities. Breakdown retest gives us an opportunity to sell this asset at this point. Now, if the contrary happens, supporting the fundamental factors we did talk about, and following this uptrend scenario that started this week, if price continues to climb and find new highs, then I want to see price break out of the previous high, which is the $74.50 level. I encourage you to mark out these levels on your chart too as well, as we will be needing it to guide our uptrend continuation. And this is the highest level price action has been for this week. So if we do have a breakout of that structure, we want to be having another buy stop order above that area to maximize the potential of this bullish move. So this is how we are going to be managing our position on the US Oil Spot for today. So I encourage us all to mark out these levels on our chart, as we will be needing them to guide our independent trading decision. So for today, our center of focus is basically between the $74.50 level. Sorry, that is not $75.40 level. Sorry. So that's a typographical error there. $75.40 level So our center of focus is between the $75.40 level and the $74.50 area. We are depending on the direction of the breakout will give us an idea where price is likely going. So in summary, a breakdown of the $74.50 level will welcome selling opportunities, while the breakout of the $75.40 area will welcome more opportunities to maximize the current buy position we are in. So this is my simple view on the US All Spot. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next assets on our watch list. So stay tuned in. And if you have found this content helpful, kindly click on the like button, give the video a thumbs up. Your likes are very valuable to me, and let's see the like grow in line with the numbers of the viewers on board. Thank you very much, guys. So the next asset on our watch list for today is the USDJPY. And remember, we revisited the USDJPY for the first time in about 4 to 5 months last week, and that was our first trade on this asset actually this year, and we did phenomenally well, scooping over 800 pips from multiple buy entries as we kept on buying this asset throughout of last week's trading session. And for those of us who are part of this profitable journey, well done and kudos to you for capitalizing on this move. Now, on the USDJPY at this point, we have quite an interesting situation going on right now, though we had a buy position triggered during the early hours of the Asian session, but we were taken out of that one in a loss, and the sell position was triggered at the breakdown of the 147.750, and we currently have a sell position running at this point in time. And I did update us this morning as regards to this setup on how we are going to be managing this for those of us who are with me on my TradingView and Telegram platform. Now, I want to also state here that hold on a second, please. Okay, all right. So I want to also state here that for those of you who are watching for the first time, I already shared a top-down analysis on the USDJPY during the course of the weekend. And if you had missed that video in any way, please go and check the video to understand what things are looking like on the higher time frame, as during the Forex Morning Mastery, we are only going to be focusing on the 1 hour time frame. If you had missed out on that video, I have the links right in the description box on this current video you are watching right now. You can go ahead and check it after the live session so you can have a background knowledge of how we got to this point, and in fact you can also use it as a tutorial to enhance your understanding of price action analysis. So with that being clarified, let's go right into the business. So This morning, we witnessed the interest rate decision from the Bank of Japan, and in fact, the Bank of Japan maintained its ultra-loose monetary policy, cutting its core inflation forecast to as well. The members of the monetary policies had an unanimous decision to maintain the interest rate at a deficit of 0.1% and upholds its yield curve control policy, which sets the upper limit for the 10-year Japanese government bond yield at 1.0% as a reference. Now, we saw after the interest rate decision earlier today, we saw a bullish traction in that regard, breaking out of the 148.300 as market participants capitalize on that deficit of 0.1% interest rate. But this momentum failed immediately after the Bank of Japan's governor started his speech. And one of the things he said here was quite some positive, let me call it an hawkish statement, which of course gave some hopes to the Japanese yen. And the bullish momentum, as we saw, waned as market participants increasingly embraced the notion that the Bank of Japan may exit the negative interest rate regime as early as the month of March or April. Now, the accompanying policy statement from the Japan Central Bank highlighted a gradual rise in the likelihood of achieving the price stability target. Now, this is a very good news, and if this can happen, if this continues like this, the chances that the Bank of Japan will pivot from the ultra-loose monetary policy increases. Now, if this increases, investors will want to come in to probably invest in the Japanese yen. Now, given the circumstances, it is essential that we remain cautious at this point, because anything could still happen. We're still looking forward to the GDP data coming up tomorrow. Is it tomorrow? Tomorrow is Wednesday, right? Yes, it's coming up tomorrow. We have the core PCE, and of course we have the S&P global publication coming up later this week, and these are very high impactful event from the US economic features, which could change the dynamics of this market despite what happened today. So we need to be very cautious despite the fact we have a sell position triggered at this point. Price came back to retest the structure, positioning for more selling opportunities at this point. And I did mention that we will be looking out for more selling opportunities if price action goes on to break down the 147.100 area. Now, there's one more thing I would like to share with you on this asset, and that is on the higher time frame. We had an ascending trend line, which we did identify on my weekend video. Remember, since the beginning of this year 2024, the price of the US dollar has been rising against the Japanese yen, giving us a uniform higher highs and higher lows, giving us this beautiful ascending trend line to work with. Now, with the situation we witnessed following the Bank of Japan's governor's speech, resulting in the breakdown of the 147.600, let's see if this is going to lead to the breakdown of those ascending trend line. And if this happens, there is a high chance that price may nosedive to the downside. So below the 147.600 is a viable area for selling opportunities in this particular market. So everything at this point in time is looking very bearish as long as price remains below that 147.600 area. Now, let's scale back down into the 1 hour time frame. Now, we shall continue to look out for more selling opportunities below the 147.100. In fact, if price action breaks down the 147.100, price would have breached the ascending trend line we just spotted on the higher time frame, welcoming more selling opportunities in this market. So let's mark out this level as it's going to be guiding more selling opportunities at this point. Now, in as much as we're looking out for selling opportunities here, we cannot ignore the potentials that buyers could still take over this market. The market is still very strong in terms of a bullish trend, and the fact that price is currently trading around the ascending trend line makes it a sensitive area to look out for. And in fact, the breakdown of this structure we saw this morning may turn out to be a false breakdown, so we need to be very, very cautious. Now, Another thing I want to call our attention to is what happened here last week, as we saw how that same 147.100 area served as a buying niche for participants in this market. And we saw that in the last 4 hours since price tested that same area, we have seen buy pressure resume on that area. Now, that is why I said a breakdown of the structure will welcome a massive sell-off in this market. But if the bullish momentum maintains above this area, how do we intend to join an uptrend move? Well, if you would ask me, I would rather want to see price break out of the resistant line of this range we identified at the beginning of the week before considering buying, though I have a buy stop order above the 148.300. However, I'm still going to be on the watch out to see if I can actually buy before the breakout of the structure happen, and that will come if I can find a significant setup that portrays that buyers are gradually gaining momentum behind the scenes. And this may come in the form of, say, series of higher highs and higher lows above this ascending trend line, giving me the privilege to join even before the breakout of that structure happens. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates if I notice anything of such. But at this point, we still maintain a bearish bias, looking out for more selling opportunities at the breakdown of the 147.100 area. And if anything new happens, trust me, I will give you updates as at when due. So this is my simple view on the USDJPY. Let's see if we can replicate what we had last week on this asset for this week again. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off to see if there are any questions before we move on to the last and final asset on our watch list. All right, in the absence of no questions, I want to assume that we are all on the same page in that regard. So I will be moving on to the next asset. I'm noticing your likes are not forthcoming at the moment. 6 likes and we have 11 viewers on board. I really appreciate your support. This is the cheapest way you can support this project. Kindly click on the like button and support the channel. Thank you very much as you do so. So with that being said, we will be moving right into the final asset on our watch list for today. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And as at this morning when I gave an update on this asset, we had 2 buy position triggered, and I did mention that we should move all stop losses, securing that current position just in case we have any sudden pullback that will happen. And in fact, if you had moved your stop losses accordingly, you must have been taken out of this buy position as we begin to notice the emergence of some selling pressure at this point in time. Well, on this particular asset, we noticed some deep buying activities during the Asian session, which enabled this asset to recoup some of the losses it made since the beginning of this week. However, the safe haven asset for me, I would say what happened during the Asian session was as a result of the support from the escalating geopolitical tensions in the Middle East and, of course, concerns surrounding the China's sluggish economy recovery. Additionally, a relatively subdued US dollar in the last 12 hours, influenced by a softer tone in US Treasury bond yield, further bolstered safe haven assets such as the gold. Now, despite these factors, the substantial upward expectation in this market is still limited, or let me say uncertain at this point in time, due to the reduced expectation for an early Fed rate cut. Everyone was expecting that there will be a Fed rate cut as early as the month of March, as at 2 weeks ago, but this has gradually reduced as we saw how resilient the US economy is, and we saw the reemergence of sticky inflation in the United States economy. And of course, we witnessed some handful of Fed official speeches during the course of last week, which was more of an hawkish statement negating any idea that there will be an early rate cut this year. So as a result of this, we are in a limbo on this particular asset. So we have factors here that supports the stabilization of the gold asset, but at the same time we have factors from the US economic features supporting a positive traction in favor of the US dollar. And as a result of this, you will see how the market structure on this asset has been confined within a range since the beginning of the week, between the $2,032 area and of course the $2,020 level, further emphasizing the level of indecision going on in this particular market. However, another thing that could also foster this indecisive phase is the anticipation of the economic features from the United States, which I did mention earlier. The GDP for Q4 coming up tomorrow. We have the S&P global publication coming up later in the week too as well. And of course, we have the core PCE data, which is of course another inflationary measure data to look out for. So based on all these factors, things are looking a little bit indecisive at this point, hereby the necessity to exercise caution and wait for significant structures to guide our decisions going forward. Now, if we look at this from a technical standpoint, looking at this landscape from a technical standpoint, one thing I did saw on this chart after considering the nature of price action since last week Wednesday is the fact that price action has been bullish. As we can see, we have series of higher lows here, giving us a beautiful ascending trend line to work with. And of course, you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to continue to look out for patterns and structures that support the idea of buying this asset. And as a result of this, I'm having a buy stop order again above the 2032 area, with the hopes that price will climb back up, and then if it continues in such a way that it breaks out of this high on Friday, that is the $2,039.50 level, we shall be adding more buy positions to our existing trade. If you would ask me, I still think that this market outlook still holds that bullish sentiment in place, and as long as price still remains above that ascending trend line, I will maintain a bullish bias here. However, in as much as we maintain a bullish bias in this market, we want to keep our options as open as possible. Now, looking at what has been going on here since last week Friday, we saw as soon as price got into that $2,039.50 level, we saw selling pressure resume from that area. And in fact, in the last 3 hours, we can see our buyers are struggling to even get close to that area, giving us something that looks like a lower high at this point. Now, if this sell pressure persists in such a way that it continues to break down the ascending trend line, this could welcome selling ideas in this market. But personally, I will feel comfortable joining a bearish momentum only if this support line for this week is broken and retested to the downside. Now, the reason why this is simply because if you look at what has been going on since the beginning of this week, you will see that at every point in time sellers tried to break down the structure, it was met with strong resistance from the buyers. And in fact, if you look at the nature of the wick of those candles, you will see they look more like sharp rejection, giving us signs that sellers are finding it difficult to settle below the structure. And this also happened last week as well. You'll see what happened around that same area. Right here on Thursday, the same thing happened. And fast forward to Wednesday stroke Tuesday's trading session for last week, the same thing also happened around that area. And this for me is a sign that we have a strong memory for buying power around that area. And at this point, I will just hold on to a bullish bias and only sell had a breakdown retest of the $2019.50 level. So this is my view here on this asset. I still strongly maintain a bullish bias on this asset based on the technical factors we talked about earlier, and of course the fundamental factors which also still support an uptrend continuation in this market. So let's see how the market will play out in the next couple of hours. We should be able to have an headway on what we will be doing next, and of course, trust me, I will be with you in the comment section of both my trading view and Telegram platforms to give you updates as at when due. And that reminds me, I already dropped the link to the XAUUSD live window in the comment section. It is pinned at the top of the comment section, so you want to click on that link, click on the notify me button so you can get notified as soon as we come online. For those of you who do not know what the XAUUSD live window is all about, well, this platform was born out of popular demand from members of this community, where we come together on a daily basis during the New York session to monitor real-time price action on the XAUUSD. So it's an opportunity for you to see how we manage our position in real time, how we position ourselves for the next move our stop losses, and of course capitalize on any sudden situations that comes up in the market. So it's an event you do not want to miss out there. So thank you very much, guys. Click on that like button, click on the link, and let's see how we are going to move on from here. So Robin Denero, thank you very much. I really appreciate that. I'm very grateful for your like. It's very useful to me. Thank you very much, and I'm very glad you found the videos very, very useful. So with that being said, here I'm open to questions, inquiries into what we talked so far. If you have any questions or you need some further clarifications to whatever we talked about today, feel free to let me know in the comment section. So as always, I will take the next 10 to 15 seconds off to see if there are any questions before we go ahead to round off on today's Forex Morning Mastery. All right. So in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we have come to the end of today's session. I see your comment, Warren Barr. Good morning. Glad to have you around. A first timer in the house. Thank you very much for your compliments. Glad to have you around with us and looking forward to seeing more of you in our subsequent editions. So on this note, I want to round off on today's edition of the Forex Morning Mastery. And in fact, today we were able to look at three financial assets which we have been monitoring since the beginning of the week, which includes the USOILSPOT, the USDJPY, and of course my favorite asset, the XAUUSD, all of which we were able to identify simple trading setup using our basic tools such as trend lines, key levels, and chart patterns only to unravel the potential trajectory of price action today. And I do hope you are able to mark out these levels as we have illustrated on the chart, as you will be needing them to guide your independent trading decisions for today. And if you have done so, well done to you. So all we just need to do is exercise patience and wait for the structures to mature before jumping into any positions today. And while we wait patiently, remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So in that regard, and with this understanding in mind, you want to ensure that you have a well-defined risk management strategy in place to mitigate against any sudden pullback from our expected direction. For those of us who are joining us for the first time, I do hope you gain one or two things from what we discussed here today. And in fact, if you do, you want to be part of the subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works and eventually be able to use the information you gathered during the Forex Morning Mastery to make your own independent trading decisions. So I look forward to seeing more of you same time tomorrow, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and at the same time prepare ourselves for tomorrow's trading session, which promises to be an exciting one as we look forward to the GDP data release from the United States tomorrow. So do have a wonderful day, everyone. I look forward to see you all in the comment section of both my TradingView, Telegram, and of course during the XAUUSD live window today as we continue to monitor price action. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.